Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be breaking down the latest action in the markets for all you long-term investors out there. We've got a packed day with political drama, mixed market moves, and some key insights to help you navigate both the short-term noise and the bigger picture. Let's dive right into the chaos and opportunity that defined January 13, 2026. First up, the big story shaking things up isn't just about earnings or indexes, it's political. President Trump is in the spotlight with ongoing tensions around Federal Reserve independence. There's a criminal investigation into Fed Chair Jerome Powell, sparking backlash from global central bankers, Wall Street leaders like Jamie Dimon, and even bipartisan voices on Capitol Hill. Trump's also pushing for tariffs on countries trading with Iran and a cap on credit card rates, which could ripple through markets. For us long-term folks, this kind of uncertainty can weigh on sentiment in the near term, but it's a reminder to focus on fundamentals over headlines. Could this erode trust in institutions and fuel inflation expectations? It's something to watch closely. Turning to the markets themselves, it was a mixed bag today. The Dow Jones took a hit, sliding nearly 0.8%, reflecting some jitters in the financial sector. The S&P 500 and Nasdaq held up better, but still dipped slightly, both down around 0.1% to 0.2%. The Russell 2000 also saw a small decline, aligning with broader caution. Meanwhile, the VIX spiked over 5%, signaling a jump in volatility as investors grapple with these macro uncertainties. For long-term strategies, these dips are often noise. Think of them as potential entry points if you've got cash on the sidelines. Zooming in on the S&P 500, we're still hovering near record territory despite today's pullback. The index is approaching a historic 7,000 milestone, which shows the underlying strength of the market even with headwinds. As long-term investors, this resilience is a good sign, but keep an eye on whether political risks or inflation data could stall this momentum in the short term. Over on the Nasdaq, tech held its ground better than expected, though it wasn't immune to the broader market softness. With AI and tech still driving so much narrative, this index remains a key barometer for growth investors like us. Short-term volatility might persist with policy debates, but the long-term trend for innovation-driven sectors looks solid. Now, let's spotlight some standout performers. On the winning side, we've got big names in tech and energy making waves. Advanced Micro Devices and Intel led the charge with impressive gains, fueled by strong demand in AI and semiconductor spaces. Roblox also caught attention with a double-digit jump, showing strength in gaming and digital platforms. For us long-term players, these sectors, especially tech, continue to offer growth potential, though it's wise to watch for overvaluation risks in the near term. On the flip side, some heavyweights took a beating today. Financial giants like JP Chase and Visa saw notable declines, likely tied to Trump's credit card rate comments and broader sector concerns. Salesforce and Adobe also stumbled, reflecting some profit-taking in tech after recent runs. While these drops sting in the short term, they could be buying opportunities for long-term portfolios if the fundamentals remain intact. Looking at the market movers, NVIDIA continues to dominate trading activity, with steady gains, showing its unshakable role in the AI narrative. Apple and Amazon were also in focus, though Amazon saw a slight dip. Tesla had a quieter day with a minor pullback, but it remains a name to watch with its volatile swings. These big players often set the tone for market sentiment, so for us long-term investors, their stability or struggles can signal broader trends to position around. Diving into the most active stocks, NVIDIA again tops the list for volume, alongside Intel, which surged on heavy trading. American Airlines saw high activity but slipped, possibly on sector-specific pressures. These high-volume names often reflect short-term speculative interest, but for us, they're a reminder to dig into the why behind the moves before jumping in. Shifting gears to earnings, it's a big week with major banks and other key players reporting. JP Chase kicked things off with results that were decent but not spectacular, missing some investment banking expectations and weighing on shares. We've also got Bank of America, Citigroup, Goldman Sachs, and Morgan Stanley coming up, which will give us a pulse on the financial sector's health. Delta Airlines reported mixed results, beating on earnings but missing revenue targets, which dragged its stock a bit. For long-term investors, these reports are critical to gauge economic health. Banks especially are a window into lending and consumer trends.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Over the past week, some large-cap stocks have posted incredible gains. Expand Energy led with a jaw-dropping surge, while Bloom Energy and Lennar also saw double-digit climbs, driven by sector strength in energy and housing. These short-term winners highlight pockets of opportunity, but for long-term strategies, ensure these gains are backed by sustainable growth before piling in. Conversely, the past week wasn't kind to everyone. CoStar Group and Synchrony Financial saw significant drops, with financials taking a hit amid policy uncertainty. These weekly losers remind us to stay diversified. Short-term pain in one sector shouldn't derail a well-balanced long-term plan. Sector-wise, energy and industrials topped the charts over the past week with solid gains, reflecting optimism around infrastructure and geopolitical-driven oil demand. Basic materials also performed well, tied to commodity strength. For us long-term investors, these sectors can be cyclical, so consider them as part of a broader allocation rather than chasing short-term trends. On the weaker end, financial services lagged over the week, hit by regulatory and policy fears. Healthcare also showed softness, though it's still up year-to-date for many names. These underperformers might offer value plays for patient investors like us if the fundamentals hold up.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.